Hi, everyone. This is Anil Saxena. I'm a practicing chartered accountant from Kanpur, and I'm trying to take out a series of videos, mostly because I've been getting a number of calls from the readers of my book, which I've been publishing since the past 6 years. In fact, I think in 2020. I came out with the fifth edition, which is a practical guide to bank auditors. It's issued by taxmen. So it's mostly because of personal reasons I could not update the book. So what I'm trying to do over a series of 5 to 6 videos is to help all my readers and all of the members who are interested to update you with the changes which have happened during 2021. So it would help you during the course of your branch audit, which I think you would be starting over the next week or probably this weekend. So, the various items which we've listed or which I've listed out for your help will, and which I'm planning to take up is one, of course, the all-important Supreme Court Order of the 23rd of March 2021, which changed the entire, focus of the branch auditors, because prior to the Supreme Court Order coming in, most of the members were of the opinion, or probably it was logically so, that one would not have to do a lot of hard work at the branch audit, because NPA identification, the asset classification, provisioning norms would probably not apply. So one would be the we'll take up the Supreme Court Order of 23rd March, then the all important internal financial control, which will again be a big burden on the branch auditors this year. Then a few important circulars where the RBI issued during the current year with respect to resolution of stressed assets, assets across all borrowers, loan categories. Then there's some RBI circulars on the whether or not a borrower with a CC or an OD account could open current accounts, and a few other things. And of course, lastly, I think over maybe 2 videos, so that the video doesn't become long. The all important LFR 2020, which has drastic changes. It also changes the concept with which the bank audit is going to be carried out this year. So quickly, I think, let's take up the Supreme Court Order of 23rd March 2021. Before I start this presentation, let me clarify that, whatever views I would be presenting in this video are to be considered purely my views, and they should not be construed to be either of the Institute of Chartered Accountants of India or my firm. Wherever I would be taking help of the relevant institutes, guidance notes or technical publication, I would, quote the respective publication. Now, the Supreme Court Order of 23rd March 2021, which came out last Tuesday, the way we're going to approach it is, number one, let's take up the background based on which the order was issued. Then the main purpose of this video is to find out what is the impact on the branch audits all members and all of us are going to have when we go out to the branches. Now, if you remember, post the pandemic happening, the COVID happening, and of course the government announcing the lockdown, the RBI had notification on 27th March and also followed by another notification declared moratorium initially for a period of 6 months and then added another 3 months. So effectively, we had a moratorium on repayment of interest and principal for the period from 1st March 2020 to 31st August 2020. So effectively, whenever we had to consider the asset classification or provisioning norms, then this particular period would get carved out as if this period of liability on the borrowers never existed. So this was about. Subsequently, of course, also the RBI and the government, they fixed the deadline for invocation of the resolution of stressed assets as of 31st December 2020. In fact, in future videos where we'll take up the RBI circulars, you would see that the invocation date still continues to be the 31st of December 2020. Now, based on the demand of the business community and also a few cases being filed, the borrowers wanted that the charge of compound interest, and of course there were various other demands, as we would see over the period of over the course of this video, that primarily the point was that the compound interest should not be charged during the moratorium period. And of course, the second portion was the second objective was to extend the moratorium period beyond 31st of August 2020, because this happened, of course, later when the COVID did not subside and the impact on the business community continued. Then, post the charge, the demand that the compound interest should not be charged, there was one writ petition which one Mr. Gajen Sharma filed, and primarily because he wanted that not only the charge of the compound interest but also extension of the moratorium period. And in response to that, the Supreme Court, in the order on the 3rd of September 2020, passed an interim order which clearly stated that the accounts which were classified as standard as per the RBI's IRAC norms, income recognition, asset classification norms, the prudential guidelines, as of the 31st of August 2020, would not be declared 31st August 2020 till further orders. So the impact was, from 1st of September 2020 onwards, no bank could declare any borrower as NPA, irrespective of whether or not he paid the dues with respect to interest, principal, and other dues. So on the 30th of September, when the first limited review financial statements were published by the banks, and then subsequently on the 31st of December. So for two limited reviews, the financial statements which were published, the accounts, the borrowers were not declared as NPA. More in the limited review financial statements of 31st December, because nearly a period of 4 months had transpired from the date of the Supreme Court order till 31st December. In fact, in the 31st December financial statements, banks, in the back end identified the potential NPAs without considering the Supreme Court order, and then provision not as per the existing provisioning norms of the bank or the Reserve Bank of India, but on prudence, a provision of around 10% of the or 15% of the borrowers, which should have been declared as NPA as of the 31st December 2020 or 30th September. But now then post this, on the 23rd of March 2021, when it was very close to the year end, and most of us were of the opinion that probably this year on 31st March 2021, auditors would have to reach the branch without having the responsibility of classifying accounts as NPA and making the corresponding provision. Except, of course, there was even then a possibility that, based on prudence, the statutory central auditors would require the branch auditors to identify potential NPAs so that, borrowers which should have been declared as NPA, probably provision could have been made on prudence basis. So the 23rd of March 2021, of course, changed the entire thing. And then you had this order, which I'll summarize for all of you. Number one, what it said was it waived the compound interest for all the borrowers who had availed the loan moratorium last year. In fact, when the 27th March 2020 circular notification of the RBI and the government came in for moratorium from 1st of March and subsequently extended up to 31st of August, there was a choice with the borrowers of whether or not I chose the moratorium. So there were borrowers who opted not to choose the moratorium and continued to repay. And then there were others who opted for the moratorium and did not pay during the period from up to 31st of August. So this relevant quote from the Supreme Court order is that, the order said that there shall not be any charge of interest on interest, stroke compound interest, stroke penal interest, etc. So primarily what, as per the original application filed, the Supreme Court ordered that there should not be any interest on interest during the moratorium period of 6 months. The second, in between, what happened was, the RBI and the central government, they passed an order, based on the application that, there should not be any interest on interest, wherein they restricted the waiver of interest on interest to loans of up to 2 crores. So, their exemption was to only loans of up to rupees 2 crores. Here again, the Supreme Court said that, there is no justification shown wherein to restrict the relief of not charging interest on interest with respect to loans up to 2 crores only, and that too restricted to the aforesaid category. So primarily what it said was, I cannot restrict the exemption of not charging interest on interest only on loans up to 2 crores. In fact, it should go across all loans irrespective of the amount of the borrower is taken. So effectively, what it summarized is that the exemption for not charging interest on interest should be across all categories and across all amounts. So irrespective of whether I've taken a loan of 200 crores or 220 crores or maybe 2 crores, I need to be given that exemption. And then obviously there was of course the RBI circular, where in response to the exemption of loans up to 2 crores with respect to charge of interest on interest, wherein the notification said that the interest already recovered needs to be adjusted either by way of a refund or by adjusting the future installments. Now here, to take care of the impact, the Supreme Court order also said that the interest already recovered needs to be adjusted in loans of 2 crores and above, because the RBI notification already covered the loans up to 2 crores. these Honorable Supreme Court Order covered loans of 2 crores and above. And they said, I quote, there shall not be any charge of interest on interest, compound interest, penal interest, and wherever the same is recovered. So, if I've already recovered that and debited that effectively, the same shall be refunded and stroke or adjusted in the next installment of the loan account. So obviously, during the March 2021 audit, although I presume and I'm dead sure that, all banks would make provision of refunding the interest or adjusting it in the future installment, the next installment of the loan account through their CBS Finacle or whichever software they're using. I would still advise all the branch auditors to do test check the compliance with this particular aspect of the Supreme Court order by looking into accounts which had availed of the moratorium and where interest had been charged on interest, and to ensure that the corresponding income has been adjusted and obviously with a corresponding debit to the income account of the bank stroke branch. Like I said, the application was not restricted to only waiver of interest during the moratorium period. The initial application covered these further subjects which the Honorable Supreme Court order rejected the following prayers. One, the total waiver of interest during moratorium period was rejected. To extend the period moratorium. Now, this is the reason why that, now the exemption of not classifying the account as NPA post 31st of August 2020 stands. So since the Supreme Court did not allow the extension of moratorium beyond 31st of August 2020, we have a situation where the banks would have to classify the respective borrowers as NPA. And then to extend period of invocation of resolution, so that also was not extended and it stands at the 31st of December 2020. There was a prayer for sector-wise reliefs provided by the RBI, which again got struck down. And of course, since there were further reliefs over and above the package which was already offered, which was asked for, which the Supreme Court order rightly rejected and extended the benefit only to 2 aspects. So now, if we have to summarize as to what exactly would be the impact of the Supreme Court order on us as branch auditors. One obviously is that from the 1st of September 2020, I would, as a branch auditor, would be required to classify accounts as NPA based on the extant prudential guidelines, the RBI Master Circular of 1st July 2015, and of course all the resolution of stressed assets RBI circulars, which were one which was issued in June 2019 last year, and of course during the current year on the 6th of August 2020, which I'll take up in future videos. So effectively, all borrowers which did not pay the interest and the principal as per the extant 90 days delinquency norms now would be required to be, number one, either classified as an NPA in terms of the prudential guidelines. So this would be a major task for us as branch auditors during the audit of 2021. Of course, this would exclude cases where the bank has already taken up the resolution of stressed assets of the borrowers and at least invoked it or probably implemented it up to the 31st of March, depending on whether it's a personal loan or they are MSME accounts or other borrowers. So this, of course, we'll take up in future videos, but primarily we as branch auditors would now need to do the test of the 90 days delinquency norms as of the 31st March, go back to finding out whether or not the principal and oblique or interest is overdue, ensure compliance with the extant delinquency norms, the prudential guidelines of the RBI, and also any other circular which the RBI has issued during the current period. So, friends, I think that's about all. To summarize it in one line is that the Supreme Court Order of 23rd March now puts all of us back to the place where we were probably where we are normally at the end of each year, but with a lot of complications which have come up in between, because as you would see that the resolution of stress-tested circulars gives us added responsibilities of ensuring compliance on various dates, so and even extending up to ensuring the asset classification of certain borrowers where assets have been resolved during the FY 2019-20, the current year, and maybe and of course, as we normally do, we extend it up to the date on which we audit. So, friend, thanks a lot for listening in to me. I'm leaving you with my details of the email and also my mobile number. So, just in case you need to contact me for any issue you may have on this, you can write to me and I would reply to it. Thank you. See you, and see you in the next video, which I would be showing on the internal financial control, which again is a very important change which has come about and has laid upon us as branch auditors huge responsibilities involving a lot of time and resources. Thank you. See you. Bye.